All right, welcome back. A minute to go for the pre-open session rates to kick in over there. Let's just have the SGX once more. Take a look at what that is indicating. Not much. Okay, not much. I mean, a lot now. 80 points higher. This was flat, right, guys?
That's
or did I miss something? I mean,
it was negative in the morning.
It happened in seconds. Before you know it, the SGX Nifty is zoomed. It's like one of those firecrackers, right? What is that? Rocket. The rocket that reversed.
Yeah, it looks like that actually.
Because like that.
Look at that. I mean, that's actually true. It's a sharp move which is coming through, and it's happening as we speak. I mean, even now, so that spike is continuing. 90 points now, 17,608. So this is quite remarkable. I don't know if there's something which has happened. We'll take a look at what Asia is doing, US futures, etc. Maybe in response to that. But this is a pretty sharp move which is coming through right now. Harindra Kumar of Elara, of course, has been waiting by. Harindra, thank you very much for waiting. You talked about Axis Bank. I have, very briefly, if you want to comment on Indices, numbers were good. Stocks sold off yesterday. There was one sort of niggle of worry, which was that the savings accounts for Indices fell about 6% quarter on quarter. So on the liability side, maybe the market is a little worried. If you want to comment there, please do. And two other names, Delivery, which completely was a washout yesterday, 15% cut, and then Policy Bazaar, which continues to make newer lows. So Indices, Delivery, and Policy Bazaar. Go on.
Yeah, so I think on Indices, prima facie, the bank is being seen as a turnaround stock. So there could be hiccups on Q-on-Q basis, but I think on the headline level, it is on the right path. There is a CV cyclical recovery, and I think they are making the right steps in terms of the SME and rural push as well. But given that you have so many larger private banks at deep value, be it HDFC Bank, Axis, for a specific turnaround plays or which are seeing revival like Indices, yes, or some of the smaller banks, I think they'll come on the later side of the tailwinds. So before the confidence builds up. So that's why the headline Bank Nifty has so many legs to go now. Given that the private banks have to play up, then the PSU, then the smaller private banks. So the Q-on-Q worries should be kept aside, and you should stay long on that. Second is, I think, on Delivery. So I think a lot of promises got made to investors during the IPO in terms of the architecture of the business model and the certain variables they are planning to tweak. It is always very tough for a challenger or an incumbent to come into the market and make those kinds of changes. So investors have bought on a promise and they're waiting for that delivery to actually come in. There are far more significantly more established players giving up, giving you returns in terms of the actually core performance on top line and bottom line, such as Blue Dart or a TCI. More also, there are certain triggers on Concor. So again, on the logistics side, you have more players on the more brick and mortar and traditional side than the new gen ones. So I think the pay trade is quite clear out there as well. So PEB, Infotech, Delivery, some of the other new age internet companies all fall in the bucket where it held a promise, but that promise is yet to be, yet to materialize. So they are being challenged on Delivery. It will be some quarters before the new tech age names will actually come to the level of promise that they went to with to the investors. So at the moment, I think it's still wait and watch for these names.
Okay, wait and watch. Well, Harindra, thanks a lot for joining in. Have a great Diwali yourself, and looking forward to interact with you a lot more through the course of the next Samvat. Thanks for joining in. Well, the pre-opening rates are settling in higher, where not as much as the SGX was suggesting, but let's see. We'll wait and watch. What looks like a rocket this morning definitely is Axis Bank, up 3%, Bajaj Finance and ITC not too far behind. Anuj is joining in now for a quick trade setup, so let's welcome him on board. Anuj, it's Diwali, right? So, I mean, the SGX Nifty from a full jetty initially has now gone straight to a rocket. What is the expectation?
Yeah, I mean, I was just looking at the SGX Nifty, and it started to make a move, and after that I came here. First of all, happy festivities to all our viewers. Happy Dhanteras to all of you and to your families and all of us, of course.
Wishing you the same, Anuj. It's going to be a special one for you as well. Promotion came this year as well, so I'm still counting on that party. But tell us about markets around.
Yes, we'll do the party, of course, Nigel. Well, for the market, clearly, the theme this morning is Atmanirbhar Bharat. It just doesn't matter to us what's happening globally. Yesterday was the best day of that, the way the market panned out, ignoring everything. And this morning, everything is up again. Bond yield, crude, dollar, all the factors which impacted yesterday, and today the market doesn't care. Yesterday the SGX Nifty was down, today it's actually up about 83 points. I hate to use this term because whenever we use it, the market falls. The decoupling theory, but it's playing out beautifully for now. In terms of Nifty, the setup is clear, buy on dips, and the bigger the dip, the bigger the quantity. I think that's how you should approach this market. What yesterday has done is it's confirmed that and has opened up 17,800 on the Nifty with 17,421 yesterday's low as your sacrosanct support. And if you are a slightly more positional player, then 17,350 to 17,250 becomes that range where you need to watch out for. But 17,800 now looks a matter of when and not if. The bank Nifty, though yesterday was weak, but still is a relatively stronger index. Positionally, that's the one where you have got far more bang for the buck. And yesterday it bounced again from the 5-day exponential moving average, which is an indication of how strong the index is. 39,850, yesterday's low, is now the new base for the bank Nifty. And going by the options data, 40,500 is your only meaningful resistance. And above that, a move to all-time high is clearly possible. Catalyst could be the numbers. Axis is already good, though there was some pre-positioning. Kotak and ICICI Bank tomorrow, so perhaps can they propel the bank Nifty to new highs? It's possible, and I would say probable as well.
All right, the stronger of the lot is the bank's financial space. Anuj, thank you very much for that, and Shubh Deepavali to you, to your team, everyone. Thanks very much. All right, we got what, 30 points now. It looks like the SGX move, which is materialized in the last 15 minutes, is kind of pulling the Nifty up as well. The pre-open is developing still. There's what, 2 minutes more, and somewhere between 907, 908, we'll have the rate settling down. But the Nifty is up 30 points now, and that is basically on the back of what's happening on the SGX, which has kind of moved sharply higher. Mitesh is back with us. Mitesh, it's going to be an interesting start, especially given what's happened in the last 10 minutes or so. What are your trades?
Yeah, in fact, Prashant, I would have wanted a gap down opening 30-40 point to buy into the index again. But for the time being, let's keep a buy on Birla Soft as the first recommendation. Keep a stop at 280 for targets of 299. Canara Bank is a buy with a stop at 253.5 for targets of 272. HPCL is a conditional buy. If it crosses yesterday's high of 206, buy with a stop at 202 for targets of 215. And Indian Hotels is a conditional sell. If it breaks yesterday's low of 312, take a stop at 317, look for targets of 300 on the negative side.
Okay, all right. Thanks a lot for that, Mitesh. We'll keep coming back to you all through the day. Well, for the time being, let's focus on Dixon Technologies. They posted an inline set of numbers. The revenue this quarter was up close to around 38%, led by the home appliance business. You had the other divisions as well, did do pretty well. The margins, though, they got hit by surging expenditure. The management has also lowered the guidance a little bit. Guidance now for FY23 is around 15,000 crores. EBITDA margins have been forecasted to come in at around 3.8 to 4% from around 4 to 4.1% earlier. Mr. Atul Lal, the MD of the company, joins in. Hi, Mr. Lal. First of all, happy Diwali from all of us here at CNBC-TV18. But let's talk about your numbers. I'm looking at your largest part of your business. That's the consumer electronics business. Out there, you didn't get much growth, though volume surged up by more than 50%. That's telling us that the open sell prices, clearly the dip that we're seeing is hurting out there. So my question to you is, the volume guidance, you're already scaled down a little bit to around 3.6, 3.5, 3.6 million tons. Is there a downside risk? And keeping in mind that realizations are getting hit, what do you end this year with in this vertical? That's a consumer electronics business. Last year, you did around 5,100 crores. Go ahead.
Wishing you a very happy Diwali and a very happy Dhanteras. So if you see our consumer electronics business, the LED television business, the volumes have grown from somewhere around 7.5 lakhs to around 11.5 lakhs, which is a volume growth of 54%. But the unit value of a television from the second quarter last fiscal, it was 18,000 rupees. It came down to around 11,000 rupees in the quarter under consideration, primarily because the open sell prices, which contributes almost 65% to the bill of material, it just crashed. Now, it doesn't make a difference to us because for us, it's a pass-through. However, on the revenue side, it had an impact. So what should have been a 54% growth in revenue turned out to be only 3% growth. But the margin expansion of 50 bips took place. So we have done very well in the second quarter. Order book looks good. I maintain that we are going to be doing approximately 3.6 to 3.7 billion in the current fiscal. That's the way it's going to be. However, the revenue growth is going to be somewhere in the range of around 7 to 10%, because I again see the open sale prices in last 2 weeks creeping up. So that's the way it's going to be.
So, Mr. Lal, you know, the problem, of course, also lies in what's happening with the operational performance, right? You've scaled down your margin guidance. Is there a threat to that guidance as well? I mean, could it get much worse before it gets better?
So the margin guidance that we had given was around 4 to 4.5%. I maintain the margin guidance would be somewhere around 4%, because there has been a slight downside because of the dollar appreciation. However, the commodity prices and also the logistics cost has significantly come down. So there is, to a large extent, balancing. So what I feel is that we should be able to maintain in the range of around 4% with 15,000 crores of revenue.
Okay. All right, 4% margins, 15,000 crores revenue maintained. Mr. Lal, thank you for joining us. Could you talk to us a little bit about the mobile phone PLI revenues in terms of booking, how that is going to look like for the rest of the year? And you're doing so much, right, in terms of diversification, the newer products, laptops, tablets. Just tell us which is the most exciting opportunity, large opportunity, which you will start working on, in the next 2 quarters.
So on the mobile PLI side, we are the first Indian company, in fact, first company amongst Indian and global companies across all the sectors in which PLI has been rolled out, which has got the PLI approval and also the disbursement. I think that's an extremely positive development. We are going to be hitting the upward ceiling that the government has prescribed for us in the current fiscal. In fact, we're going to be much beyond that. We are in the final stages of concluding a couple of large contracts in the mobile space. We've already started manufacturing 5G. So mobile is going to be one of the largest triggers in a growth journey in next 2 to 3 years. Apart from that, you're absolutely right. We are pursuing various diversifications. So we have started manufacturing hearables and wearables for our JV partner port, for which a new factory is being set up and is going to be operational by December of the current fiscal. We have already ramped up our production of TWS from our 100K a month to almost 1 million devices a month. That's a number we touched in September. And this is on a high growth curve. And very shortly, we'll be starting manufacturing of neckbands and also smartwatches. The other diversification that we pursued was in the space of telecom devices, mainly the ONTs and modems for Airtel. So that production has also reached almost 100K devices a month. So, and similarly in IT space, we have bagged a lot of almost €500,000 for tablets from a very large global brand. Yeah, so it's an exciting journey for us.
A lot of diversification coming, Mr. Lal. We'll leave it there. Short conversation, but impactful. Thank you very much for joining us, and season's greetings once again from all of us here to you, to your team. Well, that's Dixon for you, but let's revisit right before market opening a couple of names. Axis, of course, is up 3% in pre-open. Abhishek is here to revisit the numbers for us in terms of what the street is making of them. Abhishek.
Well, brokerages say that, they are positively surprised with the net interest margin expansion. So management has reiterated in the con call that the net interest margin will sustain at current levels. So they have lowered the credit cost this time around, which has lifted the return ratios. CLSA now estimates operating profit growth of nearly 21% on a CAGR basis between FY22 to 25. Analysts across have raised estimates for FY23 anywhere between 8% to 14% and by 1% to 11% for FY24 and 25. The valuation is cheap and the bank deserves a re-rating is what analysts are making. And brokerages have raised the target price now ranging between 990 to as high as 1,150 on Axis Bank. Back to you.
All right. And the other one, of course, is ITC, right? Mangalam is here to tell us how that's been smoking hot this time around. Mangalam.
Great performance coming in from ITC this time around. It was led by the leader of the pack, which is the cigarette business for them. 20% volume growth in their cigarette business. It's much above street expectations of 14 to 15%. And what that has done is, it's taken their margins much higher than what the street was anticipating. The FMCG business showed a 21% growth as against street expectations of 10 to 12%. And out there as well, margins have been maintained both year on year and quarter on quarter. There has been an improvement. All of this has happened even as the company, tightens its cost program. And we've seen recovery in all the other sectors like the hotels business, paperboards, which is facing a sectoral tailwind. So with all the pieces falling into place, ITC as a stock which has been doing well may continue to do even better. And that's what brokerages believe as well.
All right, Mangalam, thanks a lot for that. So we have, about 30 seconds left for the markets to open. And a lot of stocks in focus this morning. The SGX Nifty, of course, indicating that the start will be well in the green. And that's a 7-second opening that we have for the market. So just heading over here to the big wall to tell you about how the markets are all set to open this morning. Here's the first tick on the index. You have the Nifty that's up about 50 odd points, up 0.2%. Well above the 17,600 mark, looking quite pretty. The Sensex as well, up 150 points. Good traction seen in the mid-cap index, up almost about 0.3%. Now, three of your big gainers that you have this morning. One, of course, is Axis Bank, which has delivered a stellar set of numbers. That's the top gainer on the Nifty, up almost 4.5% right now, approaching that 860 mark. Next, let's move on to ITC. Very good set of numbers, smoking hot in the cigarette business. But the stock, remember, has been a huge outperformer this year, the biggest Nifty gainer. So not too much. It's just about managing to hold on to that 350 mark. Other good numbers coming in from the likes of Bajaj Finance. That one as well, in pre-opening, suggested a green tick. Bajaj Finance up almost about 0.2%. The rest of the lot, actually, the Nifty Bank is the one that's really taking, top honors this morning. The Nifty Bank is now up 360 points, led largely by Axis Bank because of the good numbers. But then you have some big earnings coming out tomorrow as well. There's ICICI Bank. Ahead of that, ICICI Bank has been pretty strong throughout, and that stock as well is up almost about 0.2% right now. The market breadth is firm, over 1,600 stocks on the advancing side. So it's clearly a very strong opening. But let me just hand it across to Nigel because the mid-cap index is the one that's really soaring this morning. Nigel, over to you.
Well, Sonia, a couple of notable names from the mid-cap index that are really moving around today. You had Shriram Transport came out with its set of numbers. Let's see the initial reaction out there. The numbers look, well, the numbers look pretty okay, actually, and more a positive reaction is what we expected. So it's up close to around 1% or thereabouts. Happiest Minds, remember from the mid-cap space, that's the one that delivered better than expected numbers. So the initial reaction comes up there. That's up 1% on. Emphasis, that was a bit of a sore point out there. There was a miss on margins. There's a miss on the top line growth as well. And that's down a good 2% as we speak. IEX, remember the stock has seen a sharp correction from the top, but nothing really to write home about in terms of their numbers. So that stock as well has opened with a cut of around 1%. And we were just chatting with the management of Dixon Technologies. They said revenue growth for this year will still be good, though they've scaled back a little bit on their margins. But the street says no worries on that front. It's up close to around 2.5%. PNB Housing, they're going to be getting a new boss. Nimesh had alerted us that that's likely to happen. The stock has seen a bit of a run in the last couple of days. So PNB Housing Finance as well, opening up with some bit of green. And Vodafone Idea, remember, they're getting a clearance from the regulators to go ahead with the government converting some part of those dues into equity. So that one as well is up close to around 2.5%. So good opening is what we have seen for starters, 17,600. The Nifty Bank is moving better, and the mid-cap index as well, taking some part in it. Back to you guys, joining you all shortly.
Nigel, thanks for that. So we basically have taken out day before yesterday's high. The high was 17,607, and we are at 17,615, which of course means that we're already trading above the 17,581 level, which had been acting as a resistance for the last 3 or 4 sessions. That is a 61.8% golden retracement of the September fall. So we're above it. 50 points now on the index. Market breadth is looking pretty strong. It's too early, to make any conclusions based off it, but 3:1 is what we have. Nazara is down about 2%. I think the CEO there is resigned. We can talk about that a little later. Bajaj Finance is starting about 1.25% lower. Look at delivery. Delivery is down another 7% after yesterday's 15% fall. Delivery is coming off on pretty large volumes as well, and that's the reason I'm mentioning that. Emphasis is down about 2.5%, so only highlighting things with volumes for now. There's Berger Paints, which is down about 1.5% as well. But I think the big one on the downside is delivery. It's a now 22% fall. Of course, we're just starting the day today, and things may turn around, but that's a big fall on delivery. On the upside, I think we mentioned Axis, which of course is continuing to do well, 4%. L&T Finance is up about 2.75%. The listing from earlier this Monday, which is Electronics Mart, it sort of surged through 3 digits, but now yesterday's, I think, pulled back a little bit and back up about 3%. South Indian Bank is up 5%, decent volumes. Traxon, which I think is the database company that were recently IPO'd, very small name, was up, limit up yesterday. It's up another 5% right now. And there is a small name called Gokul Agro. I think this week it is up about 50%. And again, only mentioning because it's coming up so far with decent sized volumes as well. So more stocks, more color as we go along. We're just starting, but it's a good start, 60 points higher. Our market master of the day is with us, Sandeep Bhatia, head of equity, India and country head at Macquarie Group. Sandeep, great to have you with us here. Thank you very much. You know, we've kind of wondered often enough about the outperformance and sometimes scratching our heads, wondering how far this will go and how long this will continue for. What is your sense now, Sandeep? Because out there in the US, this mini bear market rally that we were seeing looks like it's already coming to an end, but it's not doing too much damage here. Your thoughts?
So first, wishing all the viewers of CNBC and all the anchors very happy Diwali season. I think what you're asking is what is top of mind for all of us here. I remember Charles Dickens' opening lines in his book, A Tale of Two Cities. It was the best of times, it was the worst of times. So clearly for India, it's in the best of times. For the rest of the world, it's the worst of times. And the question that you're asking is that how long can India be in the best of times when the rest of the world clearly seems to be suffering? I think India will do broadly much better than anyone would have expected when we were in the COVID season for two reasons. One, I think India has a much more stable political environment, both internally and externally, than the rest of the world, especially Europe, faces. And the second thing is that we are extremely domestic-focused economy. We are going to drive this by our own consumption, by our own production, and by what's happening within India. So this clearly makes India more stable than the rest of the world. The only thing that I'll look out for are two factors. One, where the forex reserves are heading. If we see any sharp declines, especially around from $530 billion of forex reserves that we have now to, let's say, 450, then that's clearly a cause for worry for the rupee. And the second issue is how long the rate rises in the US will continue. Currently, we expect the rate rise cycle to go well into the first half of next year. But if this continues for all of 2023, if inflation becomes very persistent, India will definitely have an impact. But right now, in the Diwali season, enjoy it and take a correction. If there's any correction, use it to buy.
Okay, enjoy it. That's the most important thing, right? I think we've forgotten how to do that, especially through the course of COVID and all the challenges that we've had to face. So to all our viewers, that's the biggest message, right? Just enjoy Diwali this time around. We've been through a lot, and like Manish Shakhani was telling us yesterday, so much to be grateful for, right? I mean, we've been through a war across the world. There's been an energy crisis like you've never seen before. And I think this is just the time to sort of take stock, enjoy what you have, and perhaps move forward. So Sandeep, happy Diwali to you and to your entire team. And thanks for the literary reference, Charles Dickens. I guess you need that reminder once in a while. But tell us, what are the big themes now? I mean, what do you think will outperform? Because, you know, the big play in the last 1 year between last Samvat and now was to sell IT and buy banks. What next?
So I think the easy thing to say is that continue to buy banks, continue to buy the domestic consumption, also go into domestic capex stories. So I don't think we need to pivot away from the domestic economy. I think that has been our savior in the last 1 year, and that will continue to be our savior. But there's one interesting idea that we have been pushing, and let me tell you, we are getting a lot of pushback, and that is to buy IT. I think IT has underperformed. It is like ITC. Like ITC had 2.5 years of such bad news, and despite the fact that it's a very solid company, cash generating, it was ignored by the markets because the whole flavor of ESG. I think the IT sector is in that zone. And I don't expect any quick returns in the next 6 to 9 months for the IT sector. But for long-term investors, these kind of declines and these valuations, if you have a 2+ year time frame, at least a 2.5 to 3 year time frame, the next 6 months will be a good time to buy IT. And there, stick to the large cap stocks, whether it's TCS, Infosys, HCL Tech. These stocks could see some declines if US goes into a major recession. But if we believe Biden, there's only a very slight recession that US will see. So to that extent, we will, IT is the anti-consensus call to push, but that will take at least 6 to 9 months of more pain maybe.
Hi, Sandeep. Morning. Good to speak to you. In fact, IT in the last month or so, it's coming back because it's up close to around 7% odd. The Nifty is up close to around 1% odd. So some bit of that catch-up that you're talking about, particularly large cap IT, which is your preference, has already started playing out. But from the banking space, Sandeep, I was looking from last Diwali to this Diwali. The Nifty is a little bit, more or less flattish. The Nifty Bank as well. But the PSU banking names, that index has done well. Do you believe that the time has come now, if you're going to be having a good credit growth cycle and the credit costs are going to cool down, it's time to start allocating some money to the PSU banks as well? Or do you think that stick to the large private sector banks?
I think State Bank of India is a preferred choice if you see the private sector banks. The public sector banks have cleaned up the act. We will go through a capex cycle. The only thing that I'm worried about is if there are group-wise concentrated exposures that these public sector banks have ended up taking the last couple of months. And that is something that we are not very clear about today. And therefore, the preference will be to have weigh the portfolio in the banking sector. The banking piece in the portfolio should still be 80% weighed in favor of private banks. And the only good public sector bank, I think, would be State Bank of India. India is going through a good capex cycle. But we have seen that this runs for 2 years, and then there's always some trouble, and the public sector banks get caught up. So to that extent, we have to be careful. We are still at the beginning of this capex cycle. I would think that many people would say that even the capex cycle not even started. But yes, we should definitely still be inclined towards private sector banks.
I think some of what Sandeep is saying is echoing what Ramdev said yesterday, that eventually PSU banks will do bad lending, but that is some time away.
Yeah,
so
3 to 4
in between
years
now
away.
and then, there is perhaps money to be...
Make the most of it, yeah.
Make the most of it. Sandeep, what else? I remember I asked you about defense. You said, well, we don't have coverage. Stocks are continuing to do well. But this is not a question about defense, but what else are you very excited about, like IT? Where are you seeing values, money-making opportunities?
See, the broader capex theme continues to be attractive. So Larsen & Toubro looks attractive. I think the other thing that we need to look at is consumption. It's, again, a completely out of favor sector. We have had, not great rural outcomes, and therefore consumption will remain weak. There are some high-quality names. We need to see correction in those high-quality names before we buy them. So keep an eye out for the FMCG staples, but I would peg them below the IT because IT has already corrected, and IT will eventually benefit from the rupee depreciation. I do expect rupee to continue to remain under pressure at least till the first half of next year, till June. So IT will benefit in the next 2 years with these rupee corrections which are happening right now. FMCG will be after that, but not in the near term. So that is one sector that I would look out for, but nothing to press the pedal on right now.
Okay, nothing to press the pedal on right now. In fact, since you spoke about FMCG, right? ITC is not only at a 52-week high, but you have others. There's Nestle, there's Page Industries that have done pretty well, both in fact at 52-week highs. You think there's some valuation headroom here for any of these companies at all? And what are the pockets that you'd look at within consumption and FMCG?
So I don't expect any valuation headroom for FMCG companies. If there are any restructuring or potential spin-offs, then that can create opportunities in FMCG companies. But other than that, I think earnings growth and steady earnings growth, when that gets valued in an environment, let's say in 12 months' time, the whole world is in a crisis and consumption is weak, but Indian consumption looks good, that's when the FMCG can perform if the earnings come through. But if there are any restructuring in the FMCG name, if there any corporate restructuring, that could be a trigger.
Okay, all right, we will leave it at that. Thanks a lot for joining in, and once again, all the best to you and your entire team, and happy Diwali. Have a great Samvat. Thanks for being with us.
Take care. Bye.
Okay, bye. That's the word coming in from the Macquarie Group. But let's do one thing, since banks are the flavor of the moment, right? And Axis Bank is really firing away. Another bank, Canara Bank, posted a strong set of Q2 earnings led by robust loan growth. The company has also seen the net interest margins come in at a 9-quarter high, and asset quality has improved to the best levels in the last 7 years. We have LV Prabhakar, who is the MD and CEO of Canara Bank, who joins us now. Mr. Prabhakar, good morning and thanks for joining in. Happy Diwali to you. I wanted to first start with loan growth because it's been very strong in the quarter gone by. What do you think a sustainable loan growth can be, sir, over the next, say, 1 year? And where are you seeing the maximum traction between retail and corporate loan growth?
Canara Bank basically concentrates on two types of loan growth. One is on RAM, second one is on corporate. Even if there is a slowdown in loan growth in corporate, or in RAM, the other sector will take care about the Canara Bank. For example, in RAM, we are growing at 16.4%. Housing, we are growing at 17%. Agriculture, 20%. MSME, 13%. So all these sectors, all of a sudden, they don't stop doing very well. Every sector will do well as per the present trend, which I am observing in the coming 2 to 3 quarters. So loan growth under RAM sector for the coming quarter and the next quarter, that is Q4 of FY23, will be very good. I can say excellent. Coming to corporate, this quarter our corporate growth is very good, but going forward, it will be in a decent double-digit growth. So overall, we see that our Canara Bank credit growth in Q3 as well as Q4 FY23 will be decent double-digit growth. So it is a stable growth. This is evident. If you see the growth in the last 3-4 quarters, every quarter we are going consistently well. There is no spike in any of the parameters. So we are very bullish that Canara Bank credit growth will be very attractive in Q3 and Q4 of FY23.
Mr. Prabhakar, so just to press on that point, could it be around 12-13% growth for the full year?
Comfortably. And recently I was hearing some comments that there is a concentration of corporate in some groups. But in Canara Bank, there is no concentration to any of the groups as far as lending is concerned. We have good risk management practices and we follow that. So we don't take any exposure to any of the groups in India or abroad.
Okay, all right. Hi, Mr. Prabhakar. Would you want to give us a number? If not 12-13%, mid-teens? Should we, just trying to get a number out of you or a range.
Decent double-digit growth.
Okay, all right.
That's what I can tell.
All right, Mr. Prabhakar, let's keep the loan growth number then aside. You had launched some FDs, which was quite eye-popping, and I think you have got a good response to it as well. If I'm not mistaken, it's around 7% odd. Your cost of borrowing that will be going up a little bit, right? Now, in that sort of an environment, do you believe that you can hold on to your NIMs of around 2.83%? That's point number one. And I'm looking at your loan book. The gold loan book is very good. I think it's up 30% on a year-on-year basis. 1 lakh crore approximately is what it's clocking. What's the yield you're getting on that part of your book?
Going forward, our NIM is going to increase. Last quarter, it was 2.78. Today, it is quarter-wise, it is 2.86. And for 6 months, it is 2.83. We are not going to compromise on NIM. But Canara Bank policy is we want to take care about our stakeholders, including depositors, borrowers, and investors, and also staff. We are making good operating profit. My interest income on advances has grown by 20%. Now, taking into consideration the inflation of 7.41%, which is existing now, and also the huge income which we are making, now we thought that it is the right time to pass on some benefit to my depositors. I have about 10 crore depositors. And along with making good operating profit and net profit, I want to pass on something to my depositors also. And because of this 7% scheme, we have mobilized more than 8 lakh fixed deposits in the last 13 days. So that is the traction which we are seeing in this. So as far as Canara Bank is concerned, to take care about the future loan growth, which I am telling a decent double-digit growth, we are already having sufficient liquidity by mobilizing the deposits from the market well in time. This will help me to maintain a good inflow of deposits, and also my yield on advances, you have seen it has increased by 21 basis points. And MCLR I have increased to the extent of only 7.9%, which is the lowest or one of the lowest in the industry. I have still scope in that to make money. So going forward, I'll maintain the NIM. Coming back to the gold loan portfolio, I think we have grown at 32%. 2 years ago, my portfolio was 54,000 crores. Today, it is 1,08,000 crores. And with zero capital, the yield is about 8%. And the commission which I earn on this is about 1,000 crores.
Okay. Sir, can you give us a little bit of guidance on the asset quality as well? It has improved in the quarter gone by, but still a little over 2%. Do you think asset quality can get better through the course of the fiscal?
Ma'am, our guidance is our recoveries will always be more than the slippages. That we are continuously and consistently following in the last many quarters. And our guidance is by March 23, our net NPA will be less than 2%, but we are confident that we are going to achieve it well in advance. Gross NPA, we said that it will be less than 6% by March 23, but again, I can say that confidently that we will be less than 6% very soon. So going forward, by March 23, our gross NPA will be well below 6%, maybe at 4%, and net NPA will be less than 2%, maybe at 1.75, 1.8%.
Mr. Prabhakar, the other question is what's happening at Canfin Homes. This is the first opportunity we've had to ask you this question. So if you can tell us briefly what happened, because we spoke with Mr. Koski recently. He told us he basically, of course, we know where he's gone now. Was it just that, or were there any differences between the Can Bank team, between you and, of course, him and the team at Canfin Homes? And second, what's the plan with regards to stake sale now? And of course, before that, could you talk to us a little bit about what are you doing in terms of appointing a new head at the business?
Yeah. First point is regarding the appointment of new head. Already it is in very advanced stage. Very soon we will be appointing. In the meantime, as a succession plan, we have already a deputy MD who is competent and capable, and he is running the show. And the results which we have shown in Q2 of the Canfin Homes is very stable and very good. The business is going to grow, and all support of Canara Bank is there for the Canfin Homes. Now coming to the second point, since the beginning in the last 2 years, I am telling that Canara Bank, point number one is good corporate governance and 100% compliance. With this, we want to do the business, maybe in Canara Bank, maybe in subsidiaries. And we are following this very strictly and religiously. Third point is, as far as business is concerned, we are very professional in that. As far as personal relationship is concerned, we are very good friends. Now coming back to the third point, whether stake sale is there, we are making an operating profit of 6,905 crores per quarter. By the year end, we may be making about 26 to 27 to 28,000 crores. And net profit of 25, that is 2,525 per quarter. Per year, it may be about 9,000 to 10,000 crores. And my CRAR is more than 16.5%. So with this good financials, I have no reason to to sell my stake in my subsidiaries unless and until the valuations are very, very attractive for me and I need money. As on date, I don't require money because internal generation of cash itself is huge. So I will continue to hold the share in my subsidiaries till I get a very good valuations.
Mr. Prabhakar, sorry, just to press on that point, the first one is you said very soon you will appoint a new head. How soon is very soon? Will we see something in the next couple of weeks? Will we see something in the next couple of weeks?
In a couple of months.
Okay. All right, Mr. Prabhakar, before we let you go, you have clearly have a growth trajectory and, you believe that business is going to look good. But your term is coming to an end shortly, I believe. Will there be an extension out there? Just, I wanted to ask you. And also write-offs, they have been quite high in the past quarter. That's the only problem point, I think so. Which accounts were written off? And why such a large or a high write-off is what you've seen?
First point is, Canara Bank is run by committees and 86,000 people. So whether I continue or not doesn't make any difference to Canara Bank. And the quarter-on-quarter profit and the good parameters which the Canara Bank has shown is the testimony that going forward, Canara Bank is going to do very well. Second point is regarding the write-off, about 2,798 crores which you are talking. In the last quarter, we have done 1,48,000 OTS proposals in small ticket loans which are unsecured, which are doubtful of recovery. Generally 60 to 65% we recover and remaining 30 to 35% we write off. This portion relates to that. And the second point is, since we have a lot of surplus cash and liquidity, we generally try to make more and more provisions and prudentially write off where we see that recoveries are a bit doubtful. However, if you see my recovery in written off accounts, it is 1,205 crores. So we write off, but we don't leave them. Again, we recover them, which adds to my bottom line. So it is a process, very calculated decision which we take.
Got it. Mr. Prabhakar, I have to just press on that point very briefly on that issue on Canfin Homes. Investors in Canfin Homes are still wondering whether, who will come and when will there be a cleanup which will be required, etc. On that issue of, your dealings with Canfin Homes, you said, high standards of corporate governance for Can Bank and subsidiaries, etc. Are you hinting that there was any issue at all on that front?
See, it is a continuous process and compliance is a continuous process. And if any weaknesses are there, it has to be addressed at the earliest. That is what we did. And now the Canfin, I think Canfin Homes will be the strongest housing loan subsidiary going forward.
Okay, all right, fair enough. We'll leave it there. Thank you very much, Mr. Prabhakar. Appreciate you joining in on the program. And it's a pleasure speaking with you. We'll take a quick commercial break here. Next up, we have another PSU bank joining us. The management of Union Bank will join us to discuss their second quarter earnings performance on the other side. We'll also later connect with Umesh Revankar of Shriram Transport Finance on their numbers. It's a full lineup of financials, banks and NBFCs on the program today. Stay with us.
I think one of the sectors which I'm going to be spending more time looking at is the electronics industry, where I feel that as we move away from kind of importing from China, there'll be a lot of good growth for these companies going forward.